Good afternoon, and good afternoon, everybody. Because I started recording too early. This is Dennis Wilborn from the Active Trend Traders. Got David Grandey from All About Trends. How are you doing today, Dave?
I'm doing well. How are you doing, Dennis?
I'm doing excellent. Wild week
Great.
in the market, wasn't
Yeah, it was interesting.
it? So David's just back from Las Vegas, where he was in. What were you doing in Las Vegas?
I was attending the Money Show, and there was hundreds of presenters on all kinds of different things. Anything you want to know about the stock market, it was there. So it was fun.
And so now you said you mentioned that you were also going to be presenting at the Money Show in San Francisco coming up in August.
Yeah, so we got an invitation to do a live presentation there. We're also going to be doing a webinar in July. So looking forward to that. We've spoken there before, and yeah, so it should be fun.
Okay. And so I think everybody can hear me. If you can hear me, just really quick, pop your hand up. Great. Okay, we're continuing on. So let's take a real quick look at what's going on in the market, Dave. And I want to remind everybody that what we do present today is for training purposes only. We don't make any recommendations about what to buy, sell, and that traders should always practice paper trade, any new method that they may learn prior to risking personal capital. Market update. The market is in correction, or the correction continues, but it is holding, and I'll say this, both Dave and I were talking about this before, but it is holding the latest support zone, and it's put in some very interesting patterns going into this weekend. It continues to bounce between support and resistance. Yeah, but we have a lot of great flags on or the pullbacks that Dave and Harlan specialized on for swing trades. And right now it's been, over the last several weeks, a great traders market where you've got your short-term trades working, but it's really challenging if you are longer-term, I won't say buy and hold, but you're looking for a really good momentum trend trade. Those have been few and far between. I found this cartoon, and I thought for any of you who have a mom who's in advanced years, I helped my mom with her computer. She's 84 years old. She learned how to use a computer about 3 years ago, and I put on her computer a program where she can log onto that program. I can do the same thing, and then I can get into her computer to help her keep her computer operating correctly. But occasionally she does call tech support through her local provider, and I think that sometimes this is what Mom does, a computer tech support. All right, I've removed all my cookies, now what? And so this cartoon kind of reminds me of Mom. But if you do have a mom who's learning how to use a computer, and she's is at a mature state in life, install one of those programs where you can actually get onto her computer. It really saves a lot of headaches because you can sit there and do it, do all the process of updating the computer yourself, rather than trying to explain to Mom about what exactly needs to be done. So let's take a look at the market, guys. The chart on the left is the daily chart, and the chart on the right is the weekly chart. I want to point out that this morning I was really rooting for the S&P to close below this 50-day moving average line, so that we could get some purge going on in this market, instead of just this sideways move that we've been seeing in the S&P over the last several days and also the last several weeks. As I was mentioning to David, today was kind of this whole week has been no real conviction, but as you're evaluating and analyzing what you want to trade, I encourage everybody to, one, favor the trend, but it may not necessarily be the trend of the stock market itself. Favor the trend, the prevailing trend of the stock you're trading, because right now we've got the Dow moving sideways, the S&P moving somewhat sideways to slightly up. NASDAQ and Russell both moving down, but appearing to have found support. And so this week, what did we get? We were here last Friday, and we had a bounce off the 50-day moving average. The S&P went up 2 days up to make a new high, then puts in a shooting star, followed by this candle here, which is this bearish candle, and then sells back off on Wednesday, Thursday, and then today, while things were looking good for some more downside, about an hour and a half prior to the market close, it started cooking and bouncing back up. Now, where do we go from here with the S&P? We could bounce back up to the high on Monday, Tuesday, and then reverse. Or it could just kind of keep plodding along this little channel that it's been working on, moving higher. The expanding top is still in place for the S&P, and so we pushed up, like I said, above the 1900 level. And the thing that I'll call everybody's attention is on the weekly charts. Basically, this was a do-nothing week for the S&P. It basically closed where it started, or closed where it closed last week. And so what we see is this spinning top doji, which is a mark, from those who study candlesticks, is a mark of indecision. And on a weekly charts, even it has more significance. So the market really is, it's indecisive about where it wants to go. Let's take a look at the NASDAQ. NASDAQ, taking a look at the weekly, again, another week of indecision. The positives about the NASDAQ is that it found support on the upward trending support line, and it's got this little triangle going. So again, it would not be surprising whatsoever, found support today and yesterday on the line, and then it would not be surprising to see a bounce back up. Let me get a bounce back up to approximately this overhead resistance area about 4150, which is close to the downtrending line, and then a return here. If we bust above this, we would also be retaking the 50-day moving average, which could set us up for continued upside as the NASDAQ builds out this this kind of cup type pattern. And so we'll have to wait and see. Right now, it looks like next week maybe another bounce, but we have to wait until see what it does when it gets back up above around the 50 and back up to the top of the triangle. The last is the Russell. Russell really yesterday put in a very nice hammer, very strong hammer at a support level, and then it followed it up today with a bullish engulfing pattern, which basically closed its gap down yesterday morning. And so again, the issue with the NASDAQ is the 50 is turning over, the rest of the moving averages are turning over. However, we have found support down in this long-term support zone, and so we may be pressing to move back up to either the 20-day moving average or it could just get to the 8 and stall, or all the way up to the downtrending line that comes across here. It's interesting to note that we get just above the 8 this week. It stalls, turns around, and falls back down, and then sold off pretty significantly the last few days. This upside reversal on Thursday was fairly impressive. And the other thing that I found interesting is we've made a new low, intraday low, but our stochastics are starting to show some positive divergence. So that may aim towards some additional upside, or at least some more constructive action moving into next week. So what do you think, David?
Yeah, I agree. I mean, really wasn't much to do this week, but the way we closed the week was very constructive. So hopefully we'll see some better action next week.
Yeah, and so, well, David, are you ready to kind of present some of the things you guys are looking at?
I am.
Okay, I'm going to swap over. You have it. I'm going to mute myself, but if anybody has any questions, you can go ahead and type them in, and I will respond as quickly as I can type.
Okay, so just a quick summary of this week. Kind of a boring week, really not a lot going on with individual names. The indexes were just, we started off nice, and we had a pretty poor few days there in the middle, and then we turned things around going into the close yesterday and again today. So, but the nice thing is the indexes held support, and they could have easily rolled over. So that was encouraging to see. But not a lot of traction on either side as the market's trying to make up its mind what it wants to do here. But given that, there's still patterns, and when I was at the Money Show, there was speakers all over the place talking about the market and what's going to happen and where it's going to be a year from now or whatever. I mean, it was everywhere. Last year, everyone was buy, buy, buy. This year, everyone was go short or for things to protect your portfolio, that kind of stuff. It's classic follow the herd mentality, I guess. But for us, for Dennis and I and Harlan, we don't really need to worry so much about what the index is. All that matters is the patterns. And even if we know like the Dow's going to be up 10,000 points next year for some reason, it all comes down to, well, what are you going to do about that? How are you going to what are you going to go out and buy? What patterns are you going to trade off of? And for us, it's kind of a don't know, don't care. We just trade what we see. I'm not going to spend a whole lot of time worrying about where the indexes are going. I definitely want to make sure I trade, within the overall trend as much as possible. But it really just matters about the patterns and what's going on out there. And that goes nicely into the next slide. In the market, there's really only three things you need to know: uptrends and how to trade them, downtrends and how to trade them, and change in trend patterns. And we have examples of all three patterns that are currently setting up right now. And so it's just a matter of looking for those patterns and knowing what to do with those patterns when you see them. So we'll start with uptrends. The only pattern you need to know is the pullback off highs patterns. We're looking for stocks in confirmed uptrends above the 50-day ideally, that are making orderly low volume pullbacks towards support at either a prior breakout or the 50-day or a trend line or all three. And I'll bring up Athlon Energy here. As you can see, we have a stock that's in a very nice uptrend that is pulling back very nicely, still above the 50-day and well oversold short term. So it's just a matter of it either pulling back further to the green line where you could take the trade there at support and buy support, or you could wait till it breaks above the pink line and initiate your long side trade there. But there's other setups that we have on watch lists for our subscribers that are just like this. So there's quite a few of those patterns out there. For downtrends, it's the exact opposite. We're looking for stocks that are in downtrends that are I just lost my thought. They're pulled back. They've broken support and they pulled back off of the recent lows up into an area of resistance, such as the 50-day moving average. And we talked last week about UB&T, how we have this first thrust down in the blue box here, broken support, and then rallied back up into in the form of a bearish channel here, as in the pink lines, and then broke to the downside. And we've been talking a little bit about Visa, and that pattern is still working itself out here. There are little trades inside the channel that you can do, and then there's also the bigger the pattern here. So the question is Visa going to get back above the 50-day where it's met resistance before, or is it going to turn lower here? And then should it do that, you can either short it at on a turn away from the 50-day or on a break below the pink channel here. But MasterCard took a few months to build out its bearish channel before it broke down, and looks like Visa's doing the same thing. It's just going to take a little bit of time. So finally, change in trend patterns. right now, we have a lot of stocks that are potential change of trends from down to up, and this is where we're looking for double bottoms, and then a first thrust up, and then a pullback off the highs, and then that's when we initiate the trade. We talked about Google last week, so this is it's a little bit more prolonged pullback. I mean, definitely been in a downtrend, but formed a double bottom here, and has made this first thrust up here. So it went from 510 to 540-ish, and now it's pulling back again towards support of the 200-day, and a break above this green line is our signal to go longer. This is actually now a stronger pattern than it was last week, because we have this first thrust up and we have this pullback, and it's holding support. So it's starting a new uptrend, and we just needed to now bust through here, and we'll see where that goes. So Palo Alto Networks is another example that is, it's kind of hard to tell what it's doing right now because it's still locked in a downtrend technically, but it is finding support where it's found support many other times. So this one looks to us like in the early stages of building out a new cup-shaped base. So we have the left side, and now we have the bottom that's building out. We would like to see it continue to find support here, not go any lower. And then should that occur, we have a bottom of a cup basically to trade off of, and then we can talk about down the road how to trade that, what we call the right side of the cup crossover, how to trade it as it breaks out of its consolidation here at the bottom of the cup. But that's kind of a coming soon traction here. So what do we do as we go into next week? We've got great setups again. Lots of setups that I just like I showed you that are on our watch list, and there's something for everybody, long or short. But as the market is just indecisive, we want to continue to tread lightly and keep preserving and building up our capital, and there's great setups that are helping us do that. So allow us to build up our portfolio and get ready for the real deal, should we get there soon. So that's kind of all I have, Dennis.
Dave, thanks a lot. It takes about 2 seconds to take oneself off mute, doesn't it?
Yeah. Oh, I'm fine. I forgot the one thing. Please call me or email me anytime. I love talking about stocks and helping people out, and we have a free 15-day trial you can check out, and you can get the entire list of stocks that we're tracking right now, rather than just the 3 or 4 I showed you, and that's all there for you for 15 days, and you can trade in tandem with us. So check it out.
Excellent. David, I really, I find it very interesting because we both tend to focus on IBD quality stocks. Mm-hmm. We're looking at the same thing oftentimes, and
exactly.
Which is really awesome, and I see things just a little bit differently based on the system that I trade. But I wanted to hit a couple of items that we're seeing, that I'm seeing currently for folks. Let me take back.
While you're doing that, let me just just say this. IBD was doing a couple presentations at the Money Show, and they started off all their presentations with the 3 pillars of CanSlim, and the first pillar was fundamentals, and then the second was technicals, and the third was markets. And so for us, it's kind of the same thing, except a little different. For fundamentals, that's why we trade the IBD stocks, because IBD does all that fundamental research for us. So, the IBD 50 and their other lists are great places to start to look for the patterns. And then from the technical standpoint, it's just about looking for the patterns that I just showed you.
Yeah.
And then as far as the markets go, like I said, for us, it's all about the patterns and what leading stocks are doing technically. So while we want to pay attention to the overall trend, it really just comes down to understanding these patterns and knowing how to trade them, whether it's on the long or short side. And if you do that, you'll be very successful in the market.
Yeah, without a doubt. And yeah, Dave, one of the things that for the subscribers to the active trend traders, basically the active trend trading system was put together after kind of cherry picked from several different trend trading systems. what we come down to a lot is we found that the moving averages are very predictive on the way things work, I really marvel at how predictive the moving averages are. We gave an alert this week to some of our readers, well, to our subscribers on Visa. And I know Visa had been on your guys' list, David, also. Right. And since I am a certified candlestick technician, what I was seeing on Tuesday of this week was this little setup right here, a doji at a resistance area. And so we flashed a alert to our folks that said, here's what I'm doing. And I do trade options. And I shared with him the exact option trade that I was doing, which was a debit, or it was a bear put spread or a bear debit spread. That basically was anticipating a pullback to either the trend line or the 20-day moving average. Fortunately, the folks who took this trade were able to close this out, captured about 40 to 50% of the total profit that would have been in the trade if it would have gone to expiration. And so we alerted them, and we had several folks close here at the moving at the trend line. Several others closed out more of their position down here at 27.05. We were doing the 212.50 by 207.50 bear put spread, and we had a debit going of $1.97 and closed it out with a credit of $3.30 for a net $1.44 on the trade. And then we alerted just before the close today that if we close back above the 8-day, which is a very bullish signal on Visa, to go ahead and close out the rest of the positions. One of the other ones that we're watching right now is, let me erase my, so those of you who don't trade options, what I just had to say, probably you're going, huh? And that's okay. Those of you who do trade options, you should have been going, oh, okay, that's pretty cool. Let's take a look at Tesla. I really, let me get over here. What I'm seeing with Tesla, David, is that we get this huge sell-off after the earnings are announced, slightly disappointed, bounces off the 200-day moving average and starts moving back into this former support zone, which now has become a resistant zone. And we thought we did get a break of the steeper trend line that was connecting all these lows, but then it rebounds and finishes back up, bouncing down from the 8-day. And we're going to be watching this through the week, because what we're anticipating from Tesla is potentially a move back, if it's going to continue up now and it breaks through this 8-day, a move back either to, around 200 with the 100-day moving average, and then a breakdown on this bear flag that is forming. And if we do continue to get a move up and then it puts in some topping candles up here, that could be a pretty nice trade of about $15 to $20 back down to the this level here. However, if it does do a constructive formation for a more bullish longer-term trade, we'll be ready to go with that too, Dave. So
yeah,
that's.
I mean, for me, I see the bear channel on the daily chart, but on the weekly chart, it looks like one big pullback off highs. So, although it's pretty sloppy when you open up the daily chart. So.
Yeah, you're absolutely right. And the concern with it's going to be, we'll look and see what happens if this 8-week moving average crosses below the 20-week. Mm-hmm. And we are getting some rounding in the moving averages, which could foretell a further moving to the downside. But as you said, we're flexible and we take the patterns, as they come. So, Dave, that's all I got this afternoon. Just any questions for anybody about any stocks? Let's see here. Any stocks, folks? Okay, we got one. David, do you have Apple on your list?
I don't, but I can find it.
Seems like we always talk about Apple.
No.
And neither one of us traded. No, I'm just kidding.
Exactly.
Barbara's asking about Apple. What is your question about Apple, Barbara? I mean, just taking a picture off the chart. Last week with Apple, we get a bearish harami, and it isn't quite voided yet, and a shooting star, and we get upside pressure on Apple. But Apple kind of did the same thing that a lot of other stocks did. Here was, this is Monday, Tuesday, Wednesday, Thursday. No, here was last Friday, and it bounced up, and then it's basically gone kind of sideways for the majority of the week with a. And it looks like it has a range of about $12. Where do you think it's going? Getting back to one of the original statement is, since we've got Apple now above the 50, the 8-day, the 20-day, the 20-day, and the 8-day are also moving up dramatically. I would be looking to take Apple to the long side until it shows me some bearish signals. But I would be waiting for, if I was going to trade Apple, I'd be waiting for the proper setup, which is either a pullback to one of the strong, significant moving averages, or for it to put in a pattern, and then we would take our trade at the action point that it sets up for us. Dave, you got Apple?
I don't.
Okay.
I'll let you run with that one.
Okay. Did I run far enough?
I think you did. Yeah, I mean, it's showing it's very constructive. So there's, like you said, there's no reason to run for the hills if you own it right now.
Yeah. But if you don't own it, it's not time to get in yet.
Right.
It's got to do some, because this, unless you wait for a support bounce, and that would require some pullbacks. But we get a little bit extra volume today, but since it gapped up after earnings and then started this sideways move, it's been basically flat. Anybody else any stocks? Dave, is there any other stocks you're looking at as the folks are going through their list?
There's actually quite a few, but I'll let people take a look at our free trial and look at them that way.
That works well. And so, okay. Well, if there are no further questions, then somebody's asked me which of the moving averages I use on my weekly charts. I'm hoping I'm pronouncing this. It's theory. I use the 8-period, which approximates the 50-day moving average. That's this blue line. I use the 20-period, which approximates the 100-day moving average, and I use the 40-period moving average. That's this red dotted one, which approximates the 200-day moving average. And I depend a lot with my system on evaluating things as they approach the moving averages. I have my watch list also, where they'll sort and provide me exactly what stock is approaching the a particular moving average, and then I can take a look at the chart and do a real quick review, and then make the recommendations to the subscribers. And it's not recommendations; it's observations. And David, do you trade XLE?
No.
I don't either. I only trade basically one ETF, and that is I trade TNA, which is a 3 times leveraged long ETF that mimics the Russell 2000. Chelsea, I would say no, that today's close is not a good entry for a short, simply because, one, where's it going to go and how much am I expecting it to move, and what's my overall trend right now? My overall trend is all the moving averages are pointing up. We may get a cross up here, but it's found support here at 93. And if it's in an overall uptrend like this, until it proves that it's going into a downtrend, I wouldn't touch it to the short side. Dave?
Yeah, I mean, the trend is your friend on this one for sure. I mean, we've definitely seen some weakness though in the energy stocks. So is it, more of an orderly pullback, or is it something bigger to come? I mean, I've got energy stocks on my long side watch list right now. So
yeah, your long watch list.
Yeah.
Yeah.
Well, yes. Yeah. So long and short. I've got energy stocks on both sides of it, but so I guess it's like the index is a little indecisive right now, but there's definitely patterns out there. But would I go out and make a call on going long or short the entire sector? It's too hard to tell right now.
Yeah, I think I would move away from. I wouldn't, want to short or buy puts on XLE, simply because, I'm sorry, but there's just not enough juice in this for a weekly move. I mean, we're sitting there, and the weekly move on this was $2.09, and and that's. I want to see things are more like in the $4, $5, $10, $15, $20 per week. That's their range for the week, because with that you can design some trades to take advantage of those real quick swing trades. And like on the trade on Visa moved a little bit over $5 in about 3 days, and that's enough to make the speedometer move. So Dave asked me about the momentum indicator and the weekly charts. Yeah, this is just basically the momentum indicator. Measures the internal that's in the stock. And I use one typically on my daily charts, and on the charts that I trade off of, I'll have it on my daily chart also, rather than just the weekly. And the essence of momentum, it just tells us when the momentum is coming in or going out of the stock. And as you can see, that's what these arrows here are showing. This is telling me that my momentum just went to the positive direction. And there is some that believe that if the momentum is going up, that is the time when it makes that switch from zero momentum to a positive. That's a great time to get into a entity. So any other stocks, guys? Okay, well, with that, David, it looks like it's going to be a quick evening for us.
Sounds good. Short and sweet, I guess.
Yeah.
Well, hopefully next week we'll be more like last week, where we've got tons to talk about. But this is kind of one of those weeks.
And I'll leave everybody with this contact information for both David and myself. I will upload the video as soon as it has been modified, as YouTube likes to modify things. And tune in next week. If there's anything specifically, you can either email David or myself to say, hey, can you take a look at such and such a stock, or provide us some feedback on what we can be doing to better meet your needs, and also if you find something you like, let us know about that too, because we do like getting emails about stuff that people like, right, David?
Absolutely.
Okay. Yep. So with that, I bid you adieu. Have a great weekend, and as I always like to sign off, trade wisely and profitably. Good afternoon, everybody. Thanks, David. Hold on just a sec.
Yeah.